following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. We got the S&P screaming on back up after that big pullback we've had over the last week and a half. It's up right now 20 points on the day. We got the Nasdaq up 60 on the day already. Looking at the Russell, it is currently up 20 points right now. The Dow is up 130 points on the day. We'll talk about Google in a second. Gold is currently actually down 18 points on the day. Big 1.5% move, 2% down move on silver, and about a 0.5% move down on copper. Looking on over at oil, we're finding that oil right now is up about 90 cents, almost a 1% move on oil. We got natural gas is down 7%, almost 7%, 6.5%, and looking at pushing 7% on the day. So massive move right there in natural gas. We got corn currently up 5 points. We have soybeans up 12 points on the day. 1% move in both the ags. We got euro dollar currently down 112 pips. Pound dollar is down 67. Aussie dollar is up 43. Euro yen is down 42. US yen is currently up 53 pips. The pound yen is up 18. Dollar CAD is currently down 4 with the dollar franc up 92 pips on the day. And so dollar franc being the big percent mover of the day. It's a massive move right there. Don't usually see that kind of big move on the dollar franc. And let's check out what we got going on in our news. What all's happening, what's going on. We'll review a few different charts and go through the pieces, put them all together for you. One of those I like to look at, we're going to come back to NASDAQ, but we're going to look over here at the pound dollar. We had a pound dollar trade that happened, and some euro dollar trades, different things like that. But we'll focus in on a few of the news trades that you could have taken advantage of, what happened on them, what was the best way to play them. And so this morning, really, you had one straddle trade, okay? And the straddle trade was the U.S. GDP. It's coming out at 8:30. And out of all the different instruments you could look at, the pound dollar had the highest move with the highest percent. And often it moves 72 pips within 2 hours of the release. So we had already had a pretty massive down move. It started pulling back up. We got a lot of volatility going on. Didn't really get just that massive move we were hoping to see right there on the charts. Let me there we go, throw that crosshair on there. And so we take this over, and what we'll see is right here we got to move up about 44, and our high to low was about 49. So it had less than its expected move. Now the numbers came in a way that were negative dollar. So we had the bad unemployment claims report come out. We had the GDP number below expectation, and let me give you what those exact numbers are real quick so I can let you know how I traded this and what I did on the trade. On the advanced GDP, it came in at 3.2, and we were expecting a 3.3, so it was worse than expected. It wasn't a lot worse than expected. We were looking for a bigger deviation to get like a nice big move. Honestly, if we get that bigger deviation, we're looking for really 70 plus pips, but we're looking for like a 2.9 or a 3.5 when we got a 3.2. So it wasn't off by that much. Unemployment claims, they went up to 348,000. They were at 331. So that's also, negative for the dollar there. And so pound dollar did move up with the direction as you'd expect it to based on those reports that followed the fundamentals. Doesn't always follow the fundamentals, but it followed the fundamentals, went on up, but it didn't go that far. And so I'm sitting here, I'm watching this trade. I put it on. It's like it's just not going. It's not going. And then we're getting closer to the market opening. I'm like, should I wait? And I'm just watching the thing, and it's just not really hitting what I'm wanting it to do. And I usually want to see that move a lot faster. And so since we didn't see that move very fast, I went in and I hopped out of the trade at break even. I tried a binary actually and a straddle both this morning. Got out of both of them at break even, and you probably would have got about that anyway if you would have waited till 10 o'clock. But I saw it move, and I'm just like, we're just not getting a great move right here, and I would expect this thing to move pretty fast, pretty far. I didn't do it, and hopped on out of the trade. So just make sure you're ready to make those adjustments. If you're not seeing the thing trend, if it's taken forever, it's not going anywhere, that's when I'm going to look to just, to bail on the trade. And I'm glad I did. So, like I said, even if you would have waited till 10 o'clock, you should have been pretty close to break even on the trade anyway. So that was our pound dollar layout. Looking at any other major news, we had some earnings releases. Last night we had Facebook come out. We also had Qualcomm come out. This morning we had ExxonMobil and the Dow come on out. And then this afternoon we're going to have Amazon. We're going to have Google, the big one, okay? And we'll also have Visa on the Dow Jones also being released. Pretty much all right there at the close at 4 o'clock. So about 15 minutes of volatility you better be very aware of. And really even a few minutes before that we can see quite a bit. All right, so let's flip on over to the NASDAQ. Let's check this out and see. And I don't think I'm ready yet to hop in on the trade because we've moved so far that I want to pull back some. So, it may not, and if it doesn't, then, well, it doesn't. But I'm starting to see on the smaller time frames, I'm getting some pullbacks. But let's try to see if we're going to continue that. Here is what I mean by I want to see more pullbacks. Because if I go up here, I'm not really, I want to be able to get cheap out of the money, okay? And I want my other out of the money to pay for them. Because what we're going to be looking to do, now I may have to wait till 2 o'clock or 3 o'clock or 3:30 to put this trade on. We'll have to see. What I want to do is I actually want to do a tiered strangle. So I'd want to buy this one and this one. And then I'd want to go over here and say sell this one and this one. So there's 2 contracts, for instance. And the idea is, and maybe even higher right there, right there, might even be a little bit more ideal. I'm looking for about a $25 risk trade combination. Okay, so I'm risking $25 on the trade on the buy side and on the sell side, with the goal of making about $20 on the trade total. Okay, and now when I say 20, you could be doing 100. So maybe thousands for it, depending on how many contracts you're doing. But I'm just trying to basically make about $20 on the trade. Here's why I'm trying to do that. So I'm going to take all of that $20 and I'm going to put it into further out of the money binary contracts. So that way, if the thing really does move, okay, then that's where I make the big profit. So basically there's 3 layers to this trade. Layer 1 is you're doing a $25 strangle. Layer 2 is you're doing about a $10, okay, $10 to $12 strangle further out. And we're going to take off the $25 strangle on the buy side when it hits 43. We're going to take off the $25 strangle on the sell side if the sell side price hits 57. We highly expect that to be hit. Okay, we expect there's a very high probability that that's going to be hit because when Google moves, historically, we've seen very large moves in the NASDAQ. Now we're going to take all of that profit and we're going to put that into an out-of-the-money strangle for about $10. And so we may end up doing twice the number of contracts. And then what I'm going to do is I'm going to do the same take profit on half the position. So let's say I did 10 contracts at $25 per strangle, and we'll just say we end up netting, so that's $250 risk. Let's say we net a $200 profit on that trade. We're going to take all $200, put it into a $10 strangle. So now it's $10. We got $200. We're going to do 20 of them. We do 20 of those contracts. we're going to take off half, the same thing. Half of it when it hits 57 on the buy side, half when it hits 43 on the sell side. That's a nice high profit ratio, okay? It more than covers the risk of the remaining amount of the trade, lets us lock in that profit we got earlier. And then the third piece is then we're going to watch. And we're probably going to set it for around 92 to 94 for the take profit on the other half on the buy side. So like, if we bought it, 5 or 8 or whatever, like we'll sell out like at 92. And then if we sold at, say, $95 or $94, we're going to buy back on that other half of those 20 contracts we did. So we have 10 left. We're going to buy back half of those way down, like at $5 or, $8. Okay, somewhere in that range. And where do I come up with the number? Well, I'm going to look at the price ladder on the binaries to see if I can, come up with one. So I'll go, well, I got 96, I got 94.50, I got 92. Like, wow, 92. I mean, if you check this out, this is how I figure out a lot of times what price to get out at. If I'm looking at, 88, 92, 94, 96, and let's say I sold the 88, okay? Or, up here I sold whatever I sold for. I bought the 13.50. And I'm trying to figure out what's the best price to get out at. And then go, well, right here, I get out at 92, and that's like 4 points. But if I wait 4 more points, I only get $1.50. If I wait 4 more points, I only get $1.50. So that $92.50, that $92 right there, like, it's not worth another dollar in profit to make the Nasdaq have to move 4 more points to be able to make another buck. Literally another single dollar, okay? And risk losing all that massive profit I've made. So by looking at those out of the monies and sort of looking at the tier there, that 96, 94.50, 92, I'm like, wow, 92 is definitely the one I'd want to focus on because it's, I'm getting $4, 4 points. Okay, cool, that's easy. But then also I'm getting $1.50 for 4 points, and that's just not worth the payout. So that's basically how I'm putting the different pieces together on trying to decide where I want to take profit out on that third part of the trade. Again, first part, $25, straddling it. Second part, strangle it. Another $10 times double the amount of contracts there, strangling it. And then that third part is then the exact same thing on those 20 contracts, but half of those I'm going to hold all the way to like 92 or buying back like at 8. So it depends on what side I'm on. So if I bought at $5, I'm going to sell it at 92. If I sold, let's say 92, I'm going to buy back like at 8. And so it's just a matter of putting those pieces together and seeing if we can get the trade on. And I'll walk through a little bit more of the dynamics with you when we get back from this break. Right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. Get a little bit of that pullback, but we need a little bit more. And, of course, there's going to be plenty of time to decay between now and 4:15. We're sitting up at a 1.5 deviation level on the NASDAQ right now. So a lot of built-in movement expectation across the board there. And like I said, I'm just trying to be patient. I want to hop in the trade now. I don't want to miss out on the trade. But the big thing for me on this trade is not the simple strangle. So, yeah, we can do that trade. The big one is getting that second tier and using that first one to pay for it. Right now, that first one, because the NASDAQ's already moved so far. So now I got 1, I got 2, I got 3-minute flipping over. So we get this 4-minute to flip on down. And then we'll get that 10-minute to flip on down. Get a nice little pullback. And that'll allow us to, have some good potential second tier binaries. Because, like I said, we moved so far, we sort of burned through all of them. And so, yeah, now it's at 950. So we're getting there. Okay, so now we got a first tier, second tier possibility. Okay, we almost got. We really don't have the second tier quite yet, but we got that first one. So right here, and right over there, right there. Okay, so that becomes like our first tier, a little less than $25. And I mean, you could even go for the 35.16 if you want to push it right at the $25. So it'd make it even closer because you're really going for that higher probability trade anyway. So you go in here, and let's say you put a buy, one side, a sell on the other. So I'll walk you through the steps. And we'll look at each of them piece by piece. So, and I mean, we got time, so it's not like this is a big rush trade. But we'll put all this together. Okay, so that gives us right there like 15 on one side, 12, and they're pretty close to $25. And I go in and let's say we do 10 contracts on one side. Okay? And then we go over here, we'll set this up, and you want to get all these little pieces all put together. 10 on this side. And I'm trying to see if we just get a little bit more pullback. I had to get like a amount off of this. I'm getting ready, I'm getting all my pieces, so I get ready, get set type thing. And then the next step, ideally I want to be able to get this for 5. I'd like to get that one for 5 also. So right now they're about 9. I really want them for 5. Okay? So that's what I'm gaming for here. Just for them to pull back just a little bit more for us. And if we get it, then we'll have our first and we'll have our second tier on. And sometimes it may not work out. I may have to go another strike out. Like I may not be able to do this strike. I may have to do this strike just so I can get that $5 one. And if I put this up on a chart, so I'm watching it. But let me pull a chart up here. The NASDAQ. Then basically what we're doing is we're putting on a very simple triangle, and it'd be like up at our buy side is like 35.48, which really is not, like it's not even past our 2 deviation level as far as we are with Google. That expecting a deviation move should be pretty easy to accomplish. So we're talking about right here. Put that line on there so you can see it. And then our lower side is 35.16. It's right about here. All right, now we're going to zoom on back in. So what we're saying is, do you think that NASDAQ, based on Google, earnings releases, could move up to 35.48 or down to 35.16 between now and 4:15 when Google comes out at 4 o'clock and 1 second and is a $1,000 stock that's heavily weighted? I'd say that's a pretty high probability trade. Okay? So with that in mind, then what you'd do is you'd place that order on both sides. So you get the order all set up, get it all ready, and we'll walk through how to put all those pieces together right after this break, so stay tuned.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come back here to the Diagnostic Trading Hour. All right, so you should be able to get in that if you haven't already for less than $25. About 85. Looks like you get in for a sell side about 82.50 right now. The other side you get in, I got in for 11. You get in for about 9. So your net ought to be about the same on the trade. So put that binary strangle on, and then if you're up for doing the second piece, which is my favorite part of the trade, then you could go out and you could do one further strike out, 550 on this buy at 35.52, and 92.50 on the 35.08. Okay, so you can go in and sort of put those in and just grab them there, and they're further out of the money, so they're going to take a little longer to get all filled up on those out of the money ones. But we'll put them on and let them work it out. Okay, so. And then, if you need to, adjust your price, whatever, you can. But let's see here. So selling 10 right now. Yeah, it actually dropped down about 50 cents. We'll see if it moves back in our favor. But see, like right there, we submitted at 93. It's at 92.50. So we got to choose if that's, is that worth it for us or not? Do we want to wait? Do we not want to wait? So if I don't want to wait, I can literally just click the button and give it 50 cents on 10 contracts. It's $5. That's my choice. So that's sort of up to you. Or you just go, you know what? I want to take the trade. I want to get the fill. I'm going to take it. Boom. Okay? So, and then that's done. So we got filled. We got filled 92.50. So not bad. And then on the other side, okay, now we got all of these at 550 on the buy side. So that's our second tier. All right. So hopefully you're following along, and we got all the contracts up that we're in on right now. I mean, the amount you're seeing you're down, that's bid-ask spread. We're not worried about bid-ask spread on this trade. So we're looking for a lot bigger movement than a few bucks, and it just looks larger because there's more contracts on. Now, you could also do more on top of that, depending upon how much you're willing to risk of that. You may decide to go in and do double the amount. Okay? Like I said, it really depends upon which ones you're looking at, what you're willing to do on that specific trade. And so the first step I'm going to recommend that you do at this point, if you're doing this, now, of course, obviously I always recommend people demo trade. If you do a live trade, that's your own choice. But is we're going to set take profits. Okay? So on this 85, 50 trade right here, we're going to go in. We sold it for 85.50. We're going to set a take profit at a price of 57. Okay? So the 35.16 contract, we're going to set a take profit right there. Put that one in. When it gets to 57, then get me out. So I'm buying lower than I sold. I sold at 85.50. I'm buying back at 57. Okay? And then we're going to go over here, and we're going to find the one that we bought for 11, the 35.48. We're going to set a take profit on that one of 43. Okay? So we bought it for 11. We're going to set a take profit at 43. The reason I do that, the reason I do this 57.43 rule, is a binary is going to be worth $50 when the underlying market is at the same price as the strike, because there's a 50-50 probability it'll be there. Binary is delta. So think about what would a delta of a call option be if the market was at the strike of the call option. It would be 50. Well, that's the same thing as a binary. And then I got to account for bid-ask spread, and what if it gets like a point away? Do I really want to lose because I'm going for like a couple dollars? So 43.57 has worked really well for me. It's just a simple rule I use consistently. All right. So you go in and place that order. Okay? And so now we got our take profit on that side. So we got this one taken care of, and we got this one taken care of. Now we have our outer one that we did also. A couple ways to do this. So what I like to do on it is I like to do like half of it. Okay? Where I'll go in, and I'll change it. Okay, so I sold 10, so I'm going to buy back 5, again, at 57. And I'm going to hit place order on that. Okay? And then I'm going to go take the other 5. Remember we talked about buying that back. We sold at 92.50. So we talked about buying that back like at 8. Okay, so I'm going to buy that back at 8, but again, I need to change my quantity right there. Okay, so to 5, and buy back at 8, and hit place order. So now half of them are set to take profit at 57, half of them are set to take profit at 8. And I can verify all this by looking at the scanner. It links up. This is one of the biggest edges of the scanner, is it links your working orders directly with your open positions, so it makes it very easy to keep track of it. Now I'm going to go back down here, and I want to set my take profit on my ones that I bought for $5. Okay? And so on these, bought them for 5, they're at 6 right now. I'm going to set half of them, 5. And I'm going to take profit on half of them at 43. Okay, I mean, that's a big profit. So, no problem doing that. But then also I'm going to have that second layer. I'll take half those contracts at 5. I'm going to set my take profit on this one at 92. Then I'm going to hit place order. So double check all your work before you put it in. It's easy to make an error. Okay, if you do, even after you put it in, double check it. Make sure it's all right. But I got 5 plus 5, 10, okay. So I got all my orders, 57, 8. I sold at 92, buy back at 57, half of them. Sold at 92, buy back the other half at 8. Go down here. I bought at 5, sell out half at 43. Okay, I bought at 550 there, sell the other half at 92. And then I'll go up here and I'll look, and it's like, okay, I sold these at 85.50, buy back half at 57. I bought 10 of these at 11, sell back half at 43. So that, now everything's there, and I'm done. Okay, I mean, there's really, now if I want to add in more contracts, if the market fluctuates a lot between now and then I could always maybe add in another layer, do more with it. There's more you can add on, but that's the basic premise, okay, of the strategy is right there. Just a simple strangle, and step by step. It's not real complicated. So people they want to make it really complicated. This is one of the few announcements I'll actually do this on as far as binaries. Period. A lot of people will ask, well, why do you do the binaries instead of the strangles? Well, instead of the spreads. Well, I don't like the tech spreads. They don't make as much money because they tick in like whole points versus quarters. Also, I'm looking to make some good money on the movements as things go through. And then, now this is always fun. Check this out, okay? Market's waking up. Look at this right here. This is always an interesting thing to watch. I'm up on both sides on every position right now. So, how is that possible? How could I be profitable on both my long and my short contracts at the exact same time? Well, it's pretty simple. Implied volatility is coming into the market. Why? Because earnings are coming out. There is a larger expected move. Okay? And with a larger expected move, the prices will get more expensive. And so we hopped in right before, the implied volatility all kicked in. So we're literally like right now I could exit out at, I don't know, like 110, 120 bucks. So it's pretty cool just watching like both sides go profitable at once. And these are live. These are live contracts. And that implied volatility, I mean, it can get pretty high. And part of that, too, is as implied volatility comes in, of course, I'm sure other traders are doing this trade because I'm doing it on the air right now. The other part is, market makers sometimes will inflate that implied volatility actually because they're trying to get people on the other side of the trade to take the other side. And so by making it more attractive for the other side, by making, it allowing somebody to be able to, buy at 81 or whatever immediately versus having to buy up at like 85, 86, then that gives a motivation for somebody to take the other side of the trade. So they're trying to bring people in on the other side of the market. That's how market makers work. They're good, bad, evil. They're trying to make bid-ask spread. They're not trying to be delta, long or delta short. And if they are, they're exposed. So that's why you'll see that. Now they get some people come in, they take it, they'll bring that IV back down. All right? And then it comes back down, and then more people come in, goes back up. So it's really pretty simple, like ebb and flow to how it works. But it's just it's cool to watch it live. It's like, poof, everything lights up, and you're up across the board. Let's see here. I mean, who knows how many contracts just went through, but I'm sure they have quite a few. Pick it up and kick it in right there. Let's see here. Trying to give you any details I can on this, but really, I mean, there's not a lot to it. The main thing you're going to do is, to sit back and watch. Now, what I will tell you is, I have on these further out of the money ones, like as we get like closer and closer to 415, half of those I'm just going to leave. Okay? But let's say like one's like at 30, 35, 40, 35, 30. Like I may close out half. Okay? Like this half right here, I may just take it off like at, $35 or whatever. If we're just like, minutes to go, we're close, but we're not there. The other half, I personally just leave that order and let it do its thing. So the main reason being is a lot of times you'll get a pop, literally like sometimes in the last 15 seconds, you'll see a big pop that comes up. Okay, and so I'm just trying to think of like every little step that you might want to think of, but really, I mean, it's one of the things you leave it alone. Now, some people will go in and they'll see this, they'll make their money, and a lot of times I'll just close out, but I expect this thing to move large. Obviously, they expect it to move large, and that's why they're raising the IV. But yeah, at the end of the day, you're just going to hold on to it and put all the pieces together. Let's see here. And then what else can we do with that trade? There's really nothing else. That's it. So isn't that nice? That's simple. So there's not a whole lot you have to do. You just set a strangle on, you sit back and let Google rock the markets. Okay? Or be happy and take off $100 and walk away. whatever floats your boat. So if you did that, I mean, we put in about $400 or so in risk on the trade, $450. That's like a 25% return for doing nothing. I mean, you put the trade on to close it out and just capturing the profit. So it's not bad either. Okay, so let's check out where some of the other markets are at right now. And we'll just walk through a couple other things for tomorrow, what's coming up. And I'll keep an eye on that. We'll bring it back over. See if we see that Ivy come back down. There might be another chance at re-entry. And but I definitely watch it because sometimes those things will get really cheap as we get closer to expiration too. So sometimes there's a chance for me to hop in a second time on the trade and take advantage of it. Okay, so for the news side of things, we already know we got Google. We already know we got Amazon. It's a good idea. Here's another thing that's a good idea to do is open up a Google chart. So obviously you need a live data feed with stocks to do this. Thinkorswim. I think it's like $5 if you're using like IQ feed to add on live stocks. But it's really good to have, live stock charts so you can compare them side by side. And because obviously you're expecting one. And I probably would open up Google and Amazon both. So I'll go over here. Do Google. By the way, I'm gonna bust down to like 1 minute charts, okay? As we're getting closer and closer. And let's see here. Just make sure I choose all the templates that I like to use on this. But yeah, when we get down to like that 4 o'clock, I'm looking at 1 minute charts. See if that'll work on 1 minute or not. So I can put that on there because there's not a whole lot happening right now, obviously, on Google. It's going back and forth, people just waiting. Got a little spike right there. Somebody got like $4. Like there's some of this crazy stuff happening right now. Look at that. So that's that implied volatility coming in. See that? Just bam. That's a painful bar for someone. And so I'll pull up Google, I'll pull up Amazon. We'll put them side by side with Nasdaq. We'll walk through that piece of the trade right after this.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, will come on back here to the Diagnostic Trading Hour. So the IV's coming in, coming out, but we're, like I said, we're still about $100 in the trade, which is just funny on both sides. But looking at the trade, it's not like some people go, well, was that just the binaries? Was that just all the people coming in? No, there actually was a spike in the markets. You don't even see it on NASDAQ, okay? So looking at the Google chart, looking at Amazon chart, I got NASDAQ sitting right in the center. And look right there at about 48? So yeah, 13, 48, 49. See that big spike on Google? I mean, it literally popped up and down like 5 points. It's boom, boom, like a heartbeat. Amazon, we added a little bit later. 1351 went from 402 down to 393, literally in just like a heartbeat. So that's what's starting to happen. Okay, the market's like, so they know this is coming out, and you could also set this up. Let's say you have, let me do this. We'll set up a combination here for you, and maybe you're on Thinkorswim. We got Google, we got Amazon, we got NASDAQ, and then Let's maximize the grid sales real quick. Bring them on down to 1 minute. Go over here. We'll make sure this is at 1 minute. Then we're going to go over here. We're going to make sure this one's at 1 minute. Okay. Now, go in. We can see them. And now the data feed I use IQ Feed, and they have true tick unfiltered data. So that's one thing I really like about it is there's no filtering built in. Like these are actually trade plots and prices that happened. And sometimes you won't see those spikes that caused that implied volatility spike whenever there's a filtered data feed. So I was just curious if I was going to see them over here too. But yeah, see, we don't see that same spike here that we saw over here. So it's interesting whenever you're looking at it to go, hey, wait a minute, where'd that go? But having a couple different data feeds, having, filtered is good, but I prefer unfiltered and true tick for, very fast trades. So these charts take longer to load. They're a little slower, but, I get a lot of detail representation on them. Anyways, so you can see that IV coming in. That's what's making everything more expensive. We got in just at the right time, literally. So we did this, but yeah, see right there, we're up on both sides still. So that IV is still pretty high. And, I wouldn't be surprised to see those go into negative a little bit going into 415. But that's okay. That's not our trade. I mean, you could close out the trade, like I said, for $100 IV profit. My trade is the explosion on Google that happens right at 4 o'clock in, a second or two. And then over the next, sometimes it does take all 15, okay? But over the next 15 minutes, as that's coming out, and the press conference, and all the other little pieces, and Amazon's coming out, and, all these pieces are being dropped, then we start seeing NASDAQ move. And we don't need a massive move. One of the things to help you out on this is go in and on your charts, whether you're using Thinkorswim, whether you're using NASDAQ, is go in and plot, like I did right here, the strike. So I got the first one. I'm going to add the second one. Just plot the strike so you can see visually where you are in relation to getting close to your strike getting hit, so that way you can take profit on that trade. All right, well, I hope you all learned a couple things. I hope you have some fun on this trade. And I will talk to you tomorrow. Stay tuned. Got another great show coming up.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.